Hello, I'm Mitch Goldberg with ClientFirst Strategy. What was behind this breathtaking pre-Brexit and post-Brexit stock market activity? I'm going to explain it to you right now. Let's get started.
For some signposts, we turn to Mitch Goldberg.
We welcome Mitchell Goldberg.
And we're back. So this is how the Brexit issue worked, and this is the main cause of concern. The concern was that an economic and geopolitical event in Europe would spill over to the United States and it would go through the banking system. If the U.S. banks get hurt, it means that they often react by restricting credit availability. Now, based on what we've seen, the U.S. banking sector did not get hurt. In fact, the Federal Reserve just finished the second part of its stress test, and it'll allow 31 of the 33 biggest financial companies in the United States to go forward with expanded capital return plans, stock buybacks, and dividends. So that's why you've had this sell-off because of worries over the U.S. banking system and credit availability, because if you have a credit issue or credit tightening, that is what causes an economy to slow down and potentially go into a recession. Now that that looks like it's not going to happen, that whole sell-off from the Brexit looks like it's going to be repealed. In fact, most of it has already recovered. So the Federal Reserve agrees with it, and that's the final arbiter of the strength of the U.S. banking system, which means we should not have had such a severe sell-off, and that's why we're able to recover so quickly. Now, the second thing that's on my mind is this. The Fed is data dependent. One of the reasons the Federal Reserve held off on raising rates in its last FOMC meeting, and now we went from talking about the Federal Reserve possibly raising interest rates one or two times in the second half of 2016. A federal rate hike has now been pushed off potentially until 2018. But the Fed remains data dependent. If the banks can skate through this Brexit event without much harm, I think it pulls the FOMC expectations of a rate hike back in a little bit sooner, and that's what we're going to have to worry about now. And now we have earnings coming up in the next few weeks, which will confirm whether or not we can expect a second half earnings recovery. But also we're going to hear a lot of commentary from CFOs and CEOs about how Brexit could potentially affect corporate America in the second half of this year. Thanks again for watching. I'll see you next time.
Waste time with the masterpiece, to waste time with the masterpiece.